Hello and welcome to this third quarter Washington, D.C. retail real estate market update. My name is Deniz Senyurt and I work as a commercial real estate investment advisor. I prepared this presentation for you to help with your real estate market investment decisions. I hope you find it useful. Let's dig in. DC entered fourth quarter showing signs of distress, vacancies moving up as expected. In second quarter, it was 4.4%. In third quarter, it reached to 5.1% and rent growth declined by 0.7%. However, characteristics of retail property type changes block by block in Washington, D.C. metro area. Washington, D.C. metro area is a very large market and covers Northern Virginia to Maryland suburbs in addition to Washington, D.C. downtown. Devil really is in the detail. As in the case of all other properties, good news comes from Northern Virginia market. While Maryland and District have been suffering since the hit of the pandemic, and we found good news in the Virginia market, Northern Virginia market. 4 of the Washington, D.C. Metro's top 7 third quarter leases are signed in Northern Virginia. Nearly 45,000 square feet space leased in Sudley Manor Shopping Center in Manassas. At the same time, Modern Contemporary Furniture store took nearly 30,000 square feet space at the Park Ridge Center on the Bullock Drive in Manassas. Fewer than 30 leases are signed in District of Columbia, and just one topped the four-figure square foot mark out of all those 30 leases. The city is struggling. It is not just the retail side of it. Office and apartment side is also suffering in Washington, D.C. Downtown. One positive news is that the confirmed retail leases average around 8 years term, including several restaurants which signed leases for 10 years. Solus Brewery signed a lease of 12-year deal in the Super Hot Navy Yard neighborhood. Here is the chart for the building space absorptions. The Borough in Tyson's Corner, 820 Mother Avenue in Maryland, Eastgate Marketplace in Chantilly are the top runners for space absorption. While vacancies are increasing, healthy chunk of retail property supplies are also coming in the market. Bulk of the developments is happening in Northern Virginia. Route 7 corridor has already been dealing with a significantly high vacancy rate relative to most DC submarket. Over the last 12 months, 91 properties delivered with about 12.3 million square feet space, like here. Out of all those locations, Route 29, I-66 corridor, Tyson's Corner, and Reston are the ones who managed to lease highest, and they've seen the highest leasing activity. While Route 7 corridor only managed to lease 38.5% of their inventory of 261,000 square feet. Another project is going to happening in Northeast submarket in Washington, D.C., which continues to see new retail development across the New York Avenue, South Dakota Avenue, and North Rhode Island Avenue corridor. Next up in the area is Art Place at Fort Totten in Washington, D.C. A mixed-use development project at South Dakota Avenue is happening. Phase 1 included 100,000 square feet of retail and 520 apartments. Phase 2 will cater to young families. A museum alongside with a public charter school and a daycare is part of the project. With the new supplies in DC market, along with the pandemic impact, vacancies are expanding and more store closures are on the horizon. So the flattening of asking rents are the natural byproduct. Pre-pandemic, um, 3% escalation was seen as normal. Post-pandemic, we see more of 2% or less rent increases. The biggest challenge is collecting the rent from existing tenants. Everything is on the table, including rent forgiveness, percentage of sale arrangements, etc. DuPont Circle, Logan Circle, Georgetown are the biggest losers on rent growth. Sales volume also declined for the fourth consecutive quarter. Washington, D.C. entered the fourth quarter biggest 12-month sales volume decline. Pricing seems to establish a firm ceiling in Washington, D.C. retail market. Cap rates are around 6.3%. Credit tenant triple net properties cap rates are well below this rate. Over the last 12 months, 511 sales happened, and with a cap rate of 6.3%. Average sale price per square feet is $263 per square feet, which is again well below the last year's per square feet price of $300 per square feet. In summary, Washington, D.C. metro area retail market is showing the signs of distress. Vacancies are high, and the new retail type of property deliveries are putting the extra pressure on the rent growth. Northern Virginia market, especially Tysons Corner and Reston area, is still doing fine compared to District and Maryland market. Rent growth has already also suffered from the pandemic. DuPont Circle, Georgetown are the ones suffered the most. Cap rates are ranging around mid 6%. Given that we still don't have the vaccine for the virus, with the winter on the horizon, it is difficult to predict. However, commercial real estate, as we all know, is a long-term game. If you are looking for purchasing a retail property at a bargain price, this could be the best time ever. So I again prepared this presentation for you to get a better understanding of the Washington, D.C. retail market. I hope you found it useful. So if you need help in finding a retail property to help you to purchase, I can help you to purchase it or sell. Give me a call. You have my phone number 571-271-6604. My name is Denise Sanyurt. I'm ready to help you in your plans to invest in those type of properties. Thank you so much. Looking forward to connecting with you.